sell an investment property without paying huge capital gains and taxes? If so, there's a way to defer them and keep your money working for you. Hey there, I'm Cheryl Folks with Superior Town and Country Group by eXp Realty, here to break down why a 1031 exchange might be right for you. In real estate terms, a 1031 exchange lets you reinvest your profits and defer taxes so that you can keep more money working for you. Plus, the 1031 exchange has three major benefits. First off, it's a tax deferral. Instead of losing a big chunk of profit to taxes, you reinvest 100% of your equity into the new property. Second, it keeps you going with your real estate building wealth. You can keep upgrading to larger or more profitable properties, growing your real estate portfolio faster. Finally, you will be able to keep it all in the family by passing properties down with a real estate planning. This allows you to continue doing 1031 exchanges and eventually pass the property down to your heirs, so they avoid capital gains taxes entirely. But be careful. If you are planning to do a 1031 exchange, there are strict rules. If you do not follow these rules, you can risk the tax benefits. First off, you must identify a new property within 45 days and close within 180 days to qualify for tax deferral. The new property must be a like-kind property and investment, no primary residences. You have to use a qualified 1031 exchange company to transfer the funds, as you cannot touch the funds. And finally, you must reinvent all the proceeds to defer 100% of the taxes with the new property in equal or greater value. So if you follow these rules, you will keep more money working for you. But before you begin a 1031 exchange, it's always best to consult your tax professional and an experienced agent. If you're thinking about selling your investment property and want to maximize your returns, connect with my team and I to start your strategy today.